Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. 2023 hasn't been the best year for initial public offering or IPOs for short. So far, there have been about 140 IPOs on the US markets. That's 16% less than the same time last year. On top of that, there have been a number of lackluster debuts. Not all 2023 debuts have been underwhelming. Cool Company Ltd, traded on New York Stock Exchange under symbol CLCO, is bucking that trend. John?
Thanks, Mo. Yes, Cool Company Ltd is a pure play liquid natural gas, or LNG, shipping company that was spun off of Golar LNG Limited, and they still trade on the NASDAQ under the similar symbol GNLG. And the spun-off happened in early 2022. Cool's fleet consists of 30 liquid natural gas carriers and floating storage regasification units, or FSRUs, that operate under a balanced portfolio of short and long-term charters with major energy companies and utilities. Now, LNG carriers are ships designed to transport liquid natural gas, and FSRUs are unique vessels that are essentially floating docks that the company's liquid natural gas customers can access when they need to. As a floating storage vessel, FSRUs are not susceptible to the same kind of a volatility that other vessels might be. And these kind of vessels tend to be in demand regardless of how the broader economy is doing and a broader market. During the second quarter, Cool Company exercised and financed an option to acquire two new build LNG carriers at a discount to their market value, for which management expects to secure long-term time charters well in advance of the latter 2024 delivery, which isn't a total surprise. Demand for LNG carriers remains pretty robust. Cool Company, in fact, has a firm revenue backlog through 2026 of $1.54 billion.
This company delivered another successful quarter.
Yeah, in management's view, for sure. For the second quarter ended June 30th, Cool Company announced that total operating revenue actually slipped slightly on a quarterly basis to $90.3 million. The reduction was mostly related to the $190 million sale of the Golar Seal vessel in late March 23. Second quarter net income actually fell to $44.6 million on a sequential basis, while adjusted earnings before interest, depreciation, and amortization, or EBITDA, came in at $59.9 million. The all-important time charter equivalents, or TCE rates, averaged 81,100 per day, and that's actually down from 83,700 per day in the first quarter of 2023. Now, during the quarter, the LNG market experienced typical seasonal weakness and relatively lower prices that actually reached price parity with oil for the first time since before Russia invaded Ukraine. But during the quarter, it actually achieved full utilization across its fleet and secured well-timed growth through, like as we mentioned, the purchase of two state-of-the-art new-build LNG carriers. Management remains bullish in the near-term demand for LNG vessels with the approach of winter in the Northern Hemisphere, which is typically associated by a surge in LNG carrier demand. Trading arbitrage involving lengthy voyages to the Far East and weather-related delays that suck up shipping capacity. The market seems pretty tightly coiled right now.
This company maintained a quarterly dividend of 41 cents per share.
Yeah, Cool Company. It only went public in March 2023, so it doesn't have a storied history of providing investors with a growing dividend. It's only declared 3 dividends so far. That said, it's raised its dividend once from 40 cents to 41 cents per share and maintained that distribution in the second quarter. This works out to an annual distribution of 82 cents per share for a current yield of 6.10%.
Now, CLCO stock has been on a tear, up 23% since April, and still has double-digit upside.
Yeah, Cool Company stock has only been trading on the NASDAQ since March, but it's been outperforming the market since then, up 23% over the last 6 months, near $13.40 per share. Those are pretty solid gains, but better times are ahead. Thanks to strong industry tailwinds, Wall Street analysts have provided a low 12-month share price target for CLCO stock of $15.50, a median forecast of $18 per share, and a high estimate of $20.55 per share.
John, thank you so much for your insight. Just to recap, Cool Company Ltd is a pure play LNG shipping company with a growing fleet that has a fleet utilization of 100%. Despite seasonal weakness, Cool Company reported solid second quarter results with a firm backlog in excess of $1.5 billion through 2026. Thanks to industry and seasonal growth drivers, the following quarters and even years look robust for Cool Company Ltd. That's it for today. And make sure to go to incomeinvestors.com now to get our free report. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.